All right, you can go ahead and you can get it going. Let's do it. Kevin, it's all you, brother. Let me go ahead and introduce you formally. Um, a colleague of ours, Mr. Kevin Ards, actually signed up through our affiliate program. He's down there in Dallas, Texas. He's growing a humongous organization down here in Dallas as it relates to his insurance agency, as well as across the United States. So I want to bring him in. He has a phenomenal product, especially the one that speaks to, you know, being able to access life insurance while you're still alive, which goes against, you know, our common understanding or knowledge of it. So Kevin, hopefully I told them about the things that you do, but if there's anything that I missed, man, please feel free to let the people know who you are, what you're about, and just tell us about what the things that we need to know as it relates to insurance as real estate.
Okay. I appreciate it. Appreciate everyone taking the time out of your day to spend time with me, allowing me to educate you about insurance. More specifically, mortgage protection. So we all pretty much have heard about life insurance, and life insurance has evolved over the years. Traditionally, when it comes to mortgage protection, it basically was you had to pass away and it protected your lender, especially with agents. You guys probably know it was more like a decreasing term. So when you purchase your home, you sign up for more mortgage protection. If you pass away, then it'll pay your loan off with your lender. Well, what happened about 20 years ago, the industry started to evolve and change, and more people, we're going to the doctor more frequently. So we're getting diagnosed with all these illnesses. So you're living longer because they're treatable. So they went back and reinvented the industry of mortgage protection. So no longer can your mortgage lender, so like Wells Fargo, JP Chase, or your traditional mortgage lender, they will not be able to offer you true what the new mortgage protection is. You actually have to have a insurance license, actually a life insurance license, to be able to offer it. I'm a broker, so I actually am affiliated with over 15 A+ rating companies that actually offer mortgage protection. Just to name a few, most people know about Foresters Financial, which has been around since the late 1800s. As well as Mutual Omaha, that's been around since the early 1900s. So those companies actually offer mortgage protection. For insurance terms, mortgage protection is basically a life insurance policy with living benefits, which means it allows you to access that policy while you're still alive. So I call it a life insurance policy 2.0, which means, for example, if you have a policy in an amount of $100,000, if you pass away, then your beneficiary will actually be able to get the money like a traditional life insurance policy. But what happens if you get diagnosed with cancer, or if you have a heart attack, you have a stroke? Well, what we would do is we'll file a claim, and the company will come back and they'll say, hey, we can offer you, let's just say 50%. If they offer you 50%, that means they will cut you a check in the amount of $50,000, and you can do whatever you want to do with that money. You can actually put it inside your bank account, if you want to pay on your car note, if you want to put food on the table. But we all, at some point in our life may get affected by some kind of medical illness or something like that. And one of the number one reasons why people actually file for bankruptcy, and including losing their homes, is because medical bills. Right now, we all know we have high deductibles, we have high copays. And even if you have the best insurance, then you still have to come out of your pocket. So that's what mortgage protection is now. The next thing I want to do, I'm going to share my screen with you guys and let you watch like a quick 2.5-minute video. Then we can kind of go into it a little more. We can have any questions. My purpose and the reason why I do this is to educate people about it. Many of you probably on this, seeing this right now, you probably have never heard of these particular policies. So that's the great thing that I enjoy about my job. So with that being said, give me a second. I'm gonna take control of the screen, show you this quick video.
At the age of 33, I never thought that I would get sick with cancer.
I felt great. I felt fine. I mean, there was no problems.
I am an avid gym goer. I was really in great health.
We're faithful people. I was like, that's not going to happen to us. It's not going to happen. So when it did happen, it was like, it took our breath away.
They called to let me know that I was diagnosed with stage 2-3 breast cancer.
A melanoma.
And that's when they told us they found a tumor. I'm like, okay, well, I guess I have cancer. We got him into a local oncologist to take a look at him, and he went straight to surgery.
When she looked me in the eye and said, I had other patients who had this same thing and they've lived at least 5 years. And that's when it hit me.
When your family's hit with cancer like that, it turns your whole world upside down.
We knew it was there in the back of our mind. We never thought about it. We just paid our monthly premiums.
There were several alternative treatments that without the living benefits policy, we never would have been able to afford.
There's a lot of things associated with cancer that the insurance companies do not cover.
Sure, I had insurance, and insurance is great. I have very good insurance. I mean, I think my out-of-pocket costs were at least $30,000 for that year.
We had the mortgage, we had the car payments, we had private school tuition, we had credit card bills, groceries, okay?
When you're not working and when you don't have an income, things like that are very important.
There were thousands of dollars that we were able to rely on that living benefits policy for.
They actually paid out $343,000.
Nothing that I had financially could cover that other than the living benefit plan.
To have that policy just like that, it means the world.
Had I not had that, I don't think I would be here today.
All that worry, stress, it just evaporated instantly.
You just don't know what tomorrow brings.
It gave me so many different options. Without that money, who knows where we'd be.
That's the power of the living benefits. It's very powerful.
So that's just a quick snapshot about what living benefits mortgage protection can do for you. It actually covers over 18 different types of illnesses. These are some of the companies that I'm affiliated with. Forrester, CFG, Americo, GPM Life, and Mutual Omaha. As you can see, most of these policies, they all cover heart attack. So if you're ever diagnosed with a heart attack, if you have a stroke, if you get diagnosed with cancer, if you get diagnosed with ALS, organ failure, kidney failure, if you can't perform 2 of the daily living activities, which means if you can no longer feed yourself, bathe yourself, put your clothes on without someone insisting you can file a claim. And then also if you get diagnosed with a terminal illness. So there's over 18 different things depending on which company that I'm able to match you with. I do have different criteria that I work with different companies on to make sure that whoever my client is, that they are able to afford it, because that's one of the most important things, that you can actually afford it and it stays in place. And then also that I can get you through underwriting. I try to keep my clients with simplified issue, which means there's no blood and urine tests involved. I can actually write a policy for a individual that's 2 weeks old. A lot of people are totally unaware of that. Myself, I have multiple policies with living benefits. My spouse has multiple policies with living benefits. And then also I have my 12-year-old. She has a policy with living benefits. And it allows us to, whenever something like cancer or anything like that happens, we can access them. So we don't have to die to actually use these policies. There are some other policies out there. A lot of people are totally unaware that there's policies with living benefits that actually can build cash value as well as wealth transfer. I have my daughter in one of those. it actually is not a term insurance, which means it's called an index universal life policy. It actually goes to the age of 120. So every single year, her policy is growing interest. When you're dealing with a IUL, it actually allows you to grow a percentage, and it ranges right now between 5.84% and then all the way up to, on some, my daughter's is in, hers is 7.35%. When I wrote her, a lot of people come to me and ask me, what's the difference between a term and a whole life policy? A term policy is kind of what it is. A term policy is going to be in 10, 15, 20, 30 years. At the end of that policy is over, then you can get another one. A whole life policy is pretty much self-explanatory. It's a whole life policies. I try to steer my clients that want to do a whole life policy towards an IUL, and which is an index universal life policy, and mainly because there's no policy out there that will allow you to grow that many percentage points right now. So which means you can actually access that policy whenever you want to and take money out, and it's tax-free, and the policy will actually continue to grow like the money is still in there. A whole life policy would never do that. Like I mentioned, I have a lot of policies for my clients that put them on their 2-year-old. So they're just letting this thing grow, and it's building cash value. So when they turn 18, you can go pay for their college. You can pay for, put a down payment on a wedding, put in a house. So there's a lot of things that you can do with life insurance policies. Other than that, that's pretty much a snapshot of what I do. Just a little bit of background about me, and I forgot to tell you, is I came from corporate America. I worked with, was affiliated with Best Buy and Walmart. And I was basically, I had a lot of control of the nation. And so I was up in mid-level management, grew the business. And then I just kind of looked at it and saw that I looked at my 401k and I was like, okay, this is what life is. I need to think something differently. Luckily enough, I was able to, get my insurance license and actually go into the insurance world and protect people. And educate people. And that's one of my main things. Also with another advanced policy with life insurance license is annuities. Annuities is when you take a lump sum of money and you put it and you invest it, and it always grows. It would never, if we had another 2008, 2007, 2008, that money will either stay the same or it will grow. So a lot of my clients that are retired or roll their IRAs or 401ks over into these policies, because a lot of people, including myself, during those years when you had your 401k, it kind of went belly up, just like the housing market. So that's a great thing. Another thing that another way that you can utilize your life insurance policies. With that being said, what questions are out there? If you guys, this is open forum, it's very, very informative, or there's no 10 and 2, and you can ask me anything. Any questions?
Anybody have any questions for Kevin?
I guess cost-wise, would the index universal life insurance be more than the whole life, or how is that comparable?
Some of the criteria is based on your height, weight, your medical history. There's a criteria that we actually use. Height, weight, age, how much coverage you're looking for. Or index universal life policies more expensive than term? Yes, term is always going to be your cheapest. Well, actually, if you have a traditional W-2 job, I would tell anybody, max it out, get as much money, you get as much insurance as you can on your job, because that's going to be the cheapest, because you get a group rate. But when you leave that job, that goes away. You can keep your medical insurance, which you'll roll over to a COBRA, but your life insurance, that policy will be null and void. So I tell people do that way. But an IUL, it depends on, I can write an IUL all the way down. The lowest amount that I can write is 40,000. I can write it all the way up to 12 million. So depending on what you're looking for.
Gotcha.
You can tell me, hey, Kevin, there's some policies out there, like Mutual Omaha is growing at 5.84%, which is it's pretty good. But also I have a more advanced or a more aggressive, I should say, policy that's actually F&G, and it's growing at 7.35%. It just depends on what you're looking for and what you can afford. Of course, with anything, it's kind of like you building a car and you buying a house and you get your base and then you start adding all your upgrades. So it brings up your price. But I try to keep everything affordable. I traditionally look at term first, and some clients don't. They're like, hey, I don't want to deal with this. I just want to have something that's I pay this one amount and that's it. The great thing about these policies with any mortgage protection or living benefits policies, they're portable, which means they're tied to you. They're not tied to your home. So if you sell your home or anything like that, that policy is still attached to you. Also, it will not increase. So like, for example, my daughter, what I pay for her at the age of 12, if she never touches that policy, she can be 70 years old. The monthly premium will still be the same. So that's another great thing about it. It's best to get insurance when you're younger. If you don't know that, because every single year, your policy, your age increases the amount of the monthly premium. But whenever you get a policy dealing with mortgage protection and living benefits, it stays the same. It will not increase on you. I can write policies. A lot of people say, well, I'm not insurable. I have some companies out there that actually have people, because I run across a lot of people that have cancer, had heart attacks and things in that sort. I can still find something that can be able to allow them to be covered. I had two clients yesterday. They're 80 years old. They want some coverage. I'm able to find them something. So there's a lot of different ways, and especially with me having so many access to many for so many different companies, then I'm able to find them something.
So,
What other?
so how would you answer the question of, a lot of us, we got, we already have a bunch of bills, why add another monthly bill for something that, like, I'm not even going to be able to take advantage of in most instances? Like, what's the importance of?
That's a great question.
Yeah, let's talk about that.
Let's look at this. A lot of times when I'm meeting with my clients, I'll ask you this, Mr. Michael, if you pass away today, what would your wife do with the house? Same question. What happens, Mr. Michael, today you get diagnosed, you go to the doctor, you get diagnosed with prostate cancer. Do you have enough in your bank account, in your savings, that you can afford to continue to pay the bills, continue to pay your mortgage, continue to put food on the table, and pay the cost of your deductible and your copay for treatment? We will insure everyone on here. I'm quite sure has a cell phone, and I'm quite sure everybody on here has insurance on it. We will insure our phones. We will insure our cars, but we will not insure ourselves, our lives. Life insurance is something that protects your family. It takes that financial burden off. There's a lot of clients out there that I've had, that I had a client just a couple of weeks ago, talked to him in the week of Christmas. The lady called me 3 weeks ago and said her husband had passed. At that time, they did not take out a policy. He passed, then she called me and she said, Kevin, I don't care how much it costs, I need a policy right now. When no one wakes up every day and says, today is the day I'm gonna die. Today is the day I'm gonna get cancer. So if I had that, if I knew that, then I'll be a very wealthy man. Life can hit you at any given point in time. So that's important. Make sure that you have something in place. It doesn't have to be, if you can't afford 100,000, as long as you can afford, we can find something for 20,000. Something is better than nothing. We've all have been on Facebook when we've seen the lovely GoFundMe pages, or someone trying to get money to bury somebody. So that's why it's such an important thing that we have these policies in place to take that financial burden off yourself and your loved ones.
All right, man.
What up?
Great answer.
What other questions do you guys have for me? I mean, you can ask me any kind of thing.
So Kevin, I have a question.
Go ahead.
So when we choose a policy, is it like through your agency or is it directly through one of those other companies that you showed on the screen?
I deal with you'll deal strictly through, if I wrote you with Mutual Omaha, everything comes from Mutual Omaha. If I write you with Forster, it's gonna come from Forster's. I'm just a broker. So I'm just matching you with the appropriate company that my job is A, to educate you, B, to get you approved. I'm not going to match you, for example, with Mutual Omaha if you have diabetes, because Mutual Omaha is a healthy company. And if anyone has diabetes prior to the age of 50, it will be an automatic decline. So my job is to match you with the appropriate company. Some of the questions they'll ask, it's basically like a credit history or medical. So even if you prescribe something and you never took it, it's on your MI for your music.
Yeah.
Oh, can you hear me now?
Yeah. Can't hear nobody.
Can you hear me now? Okay, Jess is there.
Yes.
Thank you, Jess. Just like for a case, diabetes, there's different companies that have different criteria. Of course, if you're diabetic, you should know your A1C. So if you have an A1C that's say 9 or 10, a company is going to probably say that that's not controlled. Then it factors in your height and your weight and your age. So there's a lot of different things that we look at when I'm writing with my clients. So typically what I do, I ask a little brief medical history. Hey, in the last 7 to 10 years, or you have been diagnosed with are you taking any kind of medications for like high blood pressure, high cholesterol, diabetes, and then any medications that you've been prescribed. I can tell you if you've been diagnosed with cancer, a lot of companies will not want to touch you for like 10 years. So once you diagnose with cancer, you have to be cancer-free for at least 10 years in most cases. Heart attack, any heart issues, that's a hard one to get approved as well. Simplified issue, I should say, when I'm speaking, which means there's no blood and urine tests involved in it. You want to keep it, I try to keep it simplified issue because a lot of people, you get fully underwritten and you haven't been to the doctor in a year, and then you go get that blood test and then you find out you got diabetes and they come back and it's like, hey, it's a different kind of rate. So I try to keep it simple, simplified issues, which means they just pull your medical history. What other questions you guys have? Going back to kind of IULs are they're beautiful. And let me I'm an open book. So what I'll do is I'm actually going to show you an IUL, and I'm going to share my screen with you guys and kind of show you how what it looks like. Let me share my screen with you guys real fast. Okay, let me kind of shrink this. So this is a policy. This is actually my daughter's policy. It's wealth transfer, cash value, has living benefits, which is mortgage protection. Her policy is $300,000. Is a face amount, which has a death benefit of $300,000. I paid $93 a month. And what I kind of like to look at is like this. So if she keeps this policy when she turns 42, 30 years, I paid 33,000, but I can actually pull out $80,000 in cash. If I keep it for 40 years, she's 52. So in 40 years, I paid 44,000. But she can pull out $187,000 tax-free, and her death benefit when she passes away, it actually starts to increase every single year after that. So if we keep this policy for 50 years, I paid 55,000, almost 56,000, but she can pull out 419, almost 420,000 tax-free, and the policy is worth over $500,000. This policy, as you can see, it's never, it's $93 for the rest of that she keeps it. So I only pay $1,100, a little over $1,100 a year. But as you can see, it's constantly growing cash. This is a great policy. If you have grandkids, if you have a young one, put them in there, put them in a policy like this. I can build it. I build some policies that pay only $25 a month. I built this one because I wanted to grow aggressive. So the more money I put into it, the quicker it passed. If I took her to a traditional, a children's whole life policy, which is going to probably be about $25,000, and I'll probably end up paying the same amount. But in a policy like this, I'm actually building wealth transfer for her. And that's a great thing about this insurance policy. So this is something that's fairly new. You have to have a little more than a life insurance license to write this. You have to have an E&O, which is an errors and omissions license as well. And I have one of those. So that's why it allows me to write what we call in the insurance industry an advanced life insurance policy. So IULs and annuities.
Nice, thank you.
What other questions do we have out there? Simplified issued a couple of companies. One thing I would say with living benefits, I have some policies on there. I have a couple of with different carriers. One of the reasons why I have a policy that does something for each one of my policies it does something, but I can access them all. I have some term, I have some IULs. Because as we're getting older, things are going to happen. I say get it early because let's just say today I'm healthy, but tomorrow I get diagnosed with cancer and I don't have any insurance. Well, no one's going to touch me for 10 years. And if they do, it's going to be a high monthly premium. So if you can get it, when you can, go ahead and get it. Yes, Ciandra, I think I'm pronouncing you, Miss Bryant. I'm just going to say Miss Bryant. I don't want to mess up your name. I see your hand raised.
You said it right. It's okay. I had a question. Is there a certain amount that it has to get to be able to cash out, or is it just based on like the interest?
So once you put in once you get in the IUL, you need to keep it in there for at least 15 years, because basically what it's doing is growing cash, and then what we call in surrender, which means you want to end the policy. You want to keep it in there when you're doing an IUL for at least 15 years. And then after that, you can just start accessing it you want to. And it'll show on the illustration when it's basically what the cash accumulation and what the surrender value is. It's the same. If you try to, you can pull it out from day one. You can put it in there. It may be, depending on it's going to be, you may accumulate $1,000 in the first year, but if you surrender it, you don't get anything out. So it balances out year 15. But like with anything, the more money you put in there, the better it grows. The great thing about these IULs, you can actually increase it. So once you're approved, and let's just say I want to go back in and I want to increase my daughter's, like I can go back and just up it, and then they'll just adjust the monthly premium to her current age. One thing in insurance a lot of people don't realize is you can actually have a male and a female at the same age, but the female's monthly premium is going to probably be cheaper because men, and then as well as they're more frequent to go to the doctor. So usually women insurance policies are typically cheaper. Of course, if you smoke or something like that, that's going to throw the numbers off. But if they're the same age, both have the same conditions, a woman's policy is going to be cheaper than a man. What other question?
Thank you.
One last thing, simplified issue. You can typically write a simplified issue up to 400. I can get it up to 400,000, which means anything less than 400,000, then it's going to be simplified issue, which means no blood and urine. But if you came to me and say, hey, Kevin, I need a policy for $401,000, then it's going to be fully underwritten, which means it's going to require a blood and urine. Some policies, when I switch, and that's what I'm talking term. Now, if I switch it over to a IUL, that actually, I can actually kind of get that approved less than $1 million. You can actually get a simplified issue. Of course, it's going to dictate your age. So if you 75 years old and you want a policy, they're going to probably ask for a fully underwritten policy because it's just a risk that they're taking on you. Your life expectancy is not as long. But definitely, if you don't have a policy on yourself, most affordable, that's the first thing I look at. Because like I said, something's better during this pandemic and things of that sort. COVID. COVID is affecting the insurance industry. It's just like with our government, the industry is constantly moving. Right now, if someone's get diagnosed with COVID and you do not go into the hospital, they ask for at least 2 weeks when you're COVID free, and then they will actually, that's when they'll start looking at you and taking you through underwriting. If you go into the hospital, due to COVID, they probably will not approve you for 3 to 6 months. And the way everything is going right now, I was watching the news the other day and I saw that it's affecting people long term, especially with their hearts. So I'm quite sure in the near future, it's going to be some change and it might be considered, possibly, and I'm not sure, but it could be possibly like a pre-existing condition because it has that long-term effect on everybody. What other questions do you guys have for me? Anything? All you guys are agents. It's a great thing, especially if you're an agent. I'm growing an agency, so I have part-time and full-time people affiliated with me. Definitely, if you're a real estate, it's a great thing that you guys you're in front of clients all the time. It's a great way to earn extra income. You can be a one-stop shop. On average, every single application that I submit for approval on a low end, it's between $500 and $700 deposited into my bank account. I get paid 6 days a week because my bank is not open on Sunday, so I get kind of mad. But it's an extra, it's an extra income for you real estate agents, especially because you already have that rapport with the client that's purchasing the home, and they're investing in the home at least 15 to 30 years. And so you want to definitely protect it. So it's a great way that you can actually earn an extra income on the side to obtain your life insurance license. It's you take it through Exam FX and it's only like $60. I work with all of my agents, train you. I'm licensed in multiple states. So I do this all day. This is, sitting in front of a computer, and I'm doing mortgage protection throughout the whole US. So COVID kind of made the industry kind of change its way that we're doing, because traditionally we had to go face to face, which only means I had to work in my agent, work with someone in my area. But now I can write a client in Houston and I can be still sitting in Dallas. I can write a client in Georgia. I can write a client in California. Because I'm licensed everywhere. What other questions are out there? Well, I appreciate you guys taking that time out. Hopefully I put some knowledge, I got the spinning, but definitely make sure you're protected with something. have some kind of insurance in place. If you guys ever have any questions, I can be reached. Michael has my number, but I can be reached on Instagram.
Give the people your information, man.
Okay, my Instagram is KPA _Agency. That's my handle on Instagram, as well as Twitter. I can be reached at my email address is kevinards@kpaagency.com. My number, I'll give you guys the best number to reach me at is my Dallas number is 214-498-2284. That's a good number to reach me at. I have my phone on me 24/7, even when I'm traveling. So that's, if you shoot me an email, you shoot me a text message, I will definitely get back with you. If you have any questions about insurance, even if you just say, hey, Kevin, I have this policy. I don't know what I don't know what I have included in it, because a lot of people have policies and they're totally unaware of it. I'll ask them, it's like, do you know if you have living benefits? And then they're like, I don't know. I just pay this monthly premium every month. You definitely want to make sure, if you have these policies, take them out, review them, find out if it's a term, if it's a whole life. I have clients that have multiple policies. If you want to say, hey, Kevin, I just want to look at something and get something small, we can do that. Or if I want to look for something for a loved one, I can look at it for that. I just love educating people about insurance. That's my passion. Whether or not that I write you a policy, that's not what I'm here for. I'm here to educate you, because a lot of times people, and a lot of people don't like insurance people. They just, first of all, they're scared to talk about death. My parents, I have all their policies. I told my parents to put all their policies in a good location, because when something happens, I don't need to be knowing, hey, something got to get paid. And so I have all their policies in one specific location. I have them designated to put it all in. Definitely make sure that your beneficiaries are aware of what your policies are, or if you have specific, I know a lot of people have specific things they want to do with their money. If you just have some questions about that, like, hey, Kevin, can I change my beneficiary? Hey, I was married, now I'm divorced. They still a beneficiary. You got to change all that stuff. And then if some people want to, hey, I want to leave it to my estate, or I want to leave it to a charity. You can do a lot of different things with it. But definitely you got to have a primary beneficiary that's at least 18. Your contingents, which is a secondary, they can be, you can have them as a kid, or you can have multiple primaries where it's just divided out. But usually when your beneficiary has to be family related, so like a spouse, a child, it can't be a friend, it can be a fiance or something like that. So just keep that in mind when you're looking at your beneficiaries. If not, it's going to go to your estate.
Hey man, really appreciate you, Kevin, man, for doing all this for us today, really educating us on everything. We got your information, everybody got your information. So definitely, if y'all have questions, make sure you visit Kevin's website. We put his information in the chat, and then we'll go from there. Thanks, bud.
All right, thank you.
All right, you have a good one.
You too.
Everybody have a great day.